Based on the provided data for Bitcoin, a long-term investment strategy appears to be the most suitable approach. The historical price data demonstrates a consistent upward trend, with the recent price surge exceeding previous highs. The forecast price also projects continued growth over the next week, reaching levels above the current market value. This suggests that the underlying demand for Bitcoin remains strong and that the upward momentum is likely to persist. Therefore, I recommend a long position in Bitcoin. The entry price should be around $92,900, considering the current market price and the support level identified. A stop-loss order should be placed at $91,968.57, the support price, to limit potential losses. The target price can be set at $99,000, aligning with the highest projected price in the forecast and representing a substantial profit margin. This strategy capitalizes on the bullish sentiment surrounding Bitcoin and aims to capture significant gains in the long term. Given the 2-week price change and the 1-week forecast for Ethereum, a bullish investment strategy appears to be the most suitable. The historical price data reveals an upward trend, with recent fluctuations around $3,300. The forecast projects a continuous rise in price, reaching approximately $3,710 over the next week. This positive momentum, coupled with a support price of $3,535.92, suggests a strong potential for further gains. Therefore, a long position in Ethereum is recommended for a short to medium-term investment perspective. A strategic entry price could be around $3,410, aligning with the recent price action and the projected upward movement. To manage risk, a stop-loss order should be placed at $3,320, slightly below the recent lows. The target price could be set at $3,670, taking advantage of the forecast's anticipated peak. This strategy aims to capitalize on the bullish sentiment and the expected price appreciation of Ethereum within the next few weeks. Based on the provided price information for Ripple, a medium-term investment strategy appears to be the most suitable approach. The historical price data shows an overall upward trend, with recent fluctuations around the $1.40 mark. The forecast suggests continued growth, with prices potentially reaching $1.64 in the coming weeks. This indicates a bullish outlook for Ripple in the medium term. Considering this, an investment strategy could involve entering a long position at the current price, around $1.40, with a stop-loss set slightly below the recent support level at $1.3975. This would limit potential losses if the price unexpectedly drops. The target price could be set at $1.60, allowing for a reasonable profit margin while still capturing a portion of the anticipated upward momentum. This strategy balances risk and reward, aiming to capitalize on the bullish outlook for Ripple over the next few weeks while mitigating potential downside. Based on the historical price data and the provided forecast for Solana, a short-term investment strategy appears to be the most suitable. The price has shown a volatile but generally upward trend, with the recent forecast indicating a potential pullback. The entry price for this strategy would be $245, aligning with the anticipated dip in the coming week. To manage risk, a stop-loss order should be placed at $256, slightly above the current price and the resistance level. This will limit potential losses if the price unexpectedly surges. The target price for this strategy is $234, aiming to capitalize on the forecasted downward movement. This approach allows for a potential profit while acknowledging the inherent volatility of the cryptocurrency market. Given the price trends and forecast for Cardano, a medium-term investment strategy appears most suitable. While the historical prices show some volatility, the forecast indicates a consistent upward movement over the next week. The current price is hovering near the support level of $0.9454, presenting a potential entry point. A long position is advisable in this scenario to capitalize on the anticipated price increase towards the resistance level of $1.066. An entry price of $0.960 would allow you to buy in before the price potentially surges, while a stop loss at $0.945 would protect against unexpected downward movements. The target price could be set at $1.050, aiming to capture a significant portion of the anticipated upward movement. This strategy balances risk and reward, allowing for potential profits while mitigating potential losses. Based on the provided Swaycoin price information, a cautious investment strategy is recommended. The 2-week price history shows volatility, with recent fluctuations suggesting uncertainty in the short term. The forecast price indicates a slight upward trend, but the relatively narrow range suggests limited potential for significant gains. The current price is hovering near the support price, indicating potential for consolidation or a slight upward movement. Therefore, a long position is suggested for a short to medium-term investment horizon. An entry price around $3.45, slightly below the current price, would allow for a margin of safety. The stop loss should be set at $3.19, the support price, to limit potential downside risk. The target price could be set at $3.60, aiming to capture a potential upward move towards the resistance level. This strategy balances risk and reward, aiming for moderate gains while minimizing potential losses. Given the Filecoin price history and the provided forecast, a medium-term investment strategy appears most suitable. The historical data demonstrates a consistent upward trend, punctuated by periods of consolidation. The forecast suggests this upward momentum will continue, with prices projected to rise steadily over the next week. This suggests a long position is advisable. To implement this strategy, consider an entry price around $5.45, slightly below the current market price, allowing for a small margin of safety. A stop-loss order should be placed at $5.384, the support price, to limit potential losses. The target price could be set at $5.96, aligning with the forecast and providing a reasonable profit margin. This approach allows you to capitalize on the anticipated price increase while managing risk effectively. Given the price trends and forecast for Theta network, a medium-term investment strategy appears most suitable. The historical prices demonstrate a consistent upward trajectory, with the current price hovering near the support level of $2.065. The forecast suggests continued upward momentum, with prices potentially reaching $2.237, the resistance level. This indicates a bullish outlook in the medium term, making a long position a favorable strategy. For this medium-term investment, an entry price of $2.10 would allow you to buy in at a reasonable point above the current price and below the resistance level. The stop loss should be set at $2.05 to protect against unexpected price drops. The target price should be set at $2.20, allowing you to take profits before reaching the resistance level. This strategy aims to capitalize on the anticipated price increase while managing risk effectively. Based on the provided data for Dogwifhat, a cautious investment strategy focusing on the short term appears most suitable. The 2-week price history shows a general downward trend, with the forecast predicting further declines. Although the price is currently near the support level of $3.009, the resistance level of $3.256 suggests limited upward potential. Considering the forecast and the current price proximity to the support level, a short position might be advantageous. An entry price of $3.18, close to the current price and above the support level, could be considered. This allows for some room for price fluctuation before entering the short position. A stop loss at $3.26, slightly above the current price, would help mitigate potential losses if the price unexpectedly moves upwards. The target price could be set at $3.01, aligning with the recent lows and the support level, aiming to capitalize on the anticipated downward movement. Based on the provided price information for Stellar, a medium-term investment strategy appears to be most suitable. While the recent price history demonstrates a strong upward trend, the forecast suggests a period of consolidation and potential sideways movement. The support price at $0.3394 offers a solid foundation for buying, while the resistance at $0.5316 presents a potential ceiling for the near future. Therefore, a long position is recommended with an entry price around $0.400, slightly above the current price and near the support level. This allows for some room for price fluctuation before entering the position. A stop loss should be set at $0.350 to mitigate risk in case of a sudden downward move. The target price could be set at $0.500, aiming to capture a significant portion of the potential upside before encountering resistance. This strategy allows for a balance between risk and reward, capitalizing on the underlying bullish trend while acknowledging the potential for short-term consolidation. Given the provided price history and forecast for Starknet, a medium-term investment strategy appears most suitable. The price history demonstrates a generally upward trend, with recent fluctuations suggesting consolidation. The forecast indicates continued upward momentum, albeit with some short-term volatility. This suggests a potential for capital appreciation over a medium-term horizon. Therefore, an investment strategy could involve entering a long position at the current market price, with a stop loss set slightly below the recent support level of $0.449. The target price should be set around the resistance level of $0.697, allowing for potential profit capture as the price moves towards the resistance. This strategy balances risk and reward, capitalizing on the anticipated upward trend while mitigating potential losses through a well-defined stop loss. Based on the provided data for PENDLE, a moderately aggressive investment strategy suggests a long-term perspective. The historical price data reveals a fluctuating trend with an overall upward bias. The current price sits above the support level, indicating potential for further gains. While the forecast price suggests a slight upward movement, the historical data suggests that PENDLE could experience some volatility before reaching its projected targets. Therefore, a long position is recommended with an entry price around $5.30. This allows for some room for price fluctuation before entering the position. The stop loss should be set at $5.05, protecting against a potential significant drop. The target price should be set at $5.65, aiming to capitalize on the potential for upward movement towards the resistance level. This strategy balances the risk of short-term volatility with the potential for long-term gains, aligning with the overall positive trend of PENDLE. Given the historical price trend and the forecast for render, a bullish investment strategy is recommended. The historical price data shows a generally upward trend, with the price hovering around the support level of $5.291. The forecast predicts a continued upward movement, reaching as high as $8.37 in the coming weeks. This suggests a positive outlook for render in the short to medium term. Therefore, a long position is advisable. A suitable entry price would be around $7.50, aligning with the current price and offering a potential for profit as the price moves towards the resistance level of $8.032. To manage risk, a stop-loss order should be placed at $7.30, slightly below the recent support level. The target price could be set at $8, aiming to capture a significant portion of the potential price increase while leaving room for further upside. This strategy allows for a balanced approach, capitalizing on the bullish momentum while mitigating potential losses. Based on the provided VeChain price information, a medium-term investment strategy appears most suitable. The historical price data reveals an upward trend, with VeChain consistently making higher highs and higher lows. While the forecast suggests a slight pullback in the short term, it remains optimistic about the long-term direction. A long position would align with this bullish outlook. To execute this strategy, consider an entry price near the current support level of $0.03558. This provides a buffer against potential short-term price fluctuations. A stop-loss order could be placed at $0.0340 to limit potential losses. The target price could be set at $0.045, aligning with the resistance level and offering a potential profit margin of around 27%. This medium-term approach allows for capital appreciation while managing risk effectively. Given the price trends and forecast for Binance Coin, a medium-term investment strategy focusing on a long position seems appropriate. The historical prices show a fluctuating trend but generally point towards an upward trajectory. The current price is near the support level of $622.75, indicating a potential buying opportunity. The forecast suggests a gradual increase in price, reaching $630 within the next week. This aligns with the historical upward momentum and suggests continued growth in the medium term. Therefore, an investment strategy for Binance Coin should involve entering a long position at the current price around $620. A stop-loss order should be placed at $615 to limit potential losses if the price drops unexpectedly. The target price should be set at $640, aiming to capture a significant portion of the forecasted price increase. This strategy allows for a balance between risk and reward, capitalizing on the potential for growth while mitigating potential downside. The historical price data for Conflux shows a fluctuating trend, with recent peaks around $0.186 and troughs around 14 cents. The forecast price suggests a continuation of this upward momentum, with prices expected to hover between 17 cents and $0.182 in the coming week. Considering this, a long-term investment strategy focused on the long side appears promising. The entry price should be around $0.177, slightly below the current price and above the support level of $0.1777. This allows for some downside protection while still capturing potential upside as the price moves towards the forecast range. The stop loss can be set at $0.173, just below the recent support level, to limit potential losses. The target price should be set at $0.186, aiming to capitalize on the potential for a price increase towards the recent high. This strategy capitalizes on the positive forecast and historical price trends, aiming for a moderate return over the medium to long term. Based on the provided information for Worldcoin, a short-term investment strategy appears to be the most suitable. The price history shows a fluctuating trend, but the forecast indicates a slight upward movement in the coming week. The current price is relatively close to the support price, suggesting a potential for a short-term bounce. Therefore, I recommend a long position in Worldcoin. An ideal entry price would be around $2.35, aligning with the forecast and the current price. To manage risk, a stop-loss order should be placed at $2.28, slightly below the recent lows. The target price could be set at $2.50, aiming to capitalize on the potential upward movement predicted by the forecast. This strategy allows for potential profit from a short-term price increase while mitigating risk through a well-defined stop-loss. Based on the provided data for Avalanche, a short-term investment strategy appears to be the most suitable. The historical price data shows a recent upward trend, with the price currently hovering near its forecast and support level. This suggests a potential for further upward movement in the short term. However, the resistance level is relatively close, indicating that the upward momentum may be limited. Therefore, a long position is recommended to capitalize on the potential price increase towards the resistance level. The entry price should be set at $41, aligning with the current forecast and support price. The stop loss should be placed at $38.26, the support price, to minimize potential losses. The target price should be set at $49.86, the resistance level, aiming to capture the full potential upside before the price encounters resistance. This strategy allows for a relatively quick profit opportunity while mitigating risk by setting a clear stop loss. Based on the provided price history and forecast for Jupiter, a short-term investment strategy with a bearish outlook appears to be the most suitable approach. The 2-week price change demonstrates a volatile pattern with a slight downward trend. The forecast indicates a continued decline in price over the next week, suggesting a bearish sentiment in the short term. Given this analysis, I recommend entering a short position at the current price of $1.12. The stop loss should be set at $1.13 to limit potential losses if the price unexpectedly rebounds. The target price should be $1.05, aiming to capture a potential decline towards the support level. This strategy capitalizes on the anticipated downward price movement while managing risk through a well-defined stop loss. Based on the provided EOS price history, forecast, and support/resistance levels, a medium-term bullish investment strategy appears most suitable. The historical price data reveals an overall upward trend, with recent fluctuations hovering around the support price of $0.7446. The forecast suggests continued upward momentum, reaching up to $0.876 in the coming weeks. This positive outlook, combined with the proximity to the support level, presents a favorable opportunity to enter a long position. An ideal entry price would be around 76 cents, slightly above the current price and close to the support level. This allows for a margin of safety while capitalizing on potential upward movement. A stop-loss order should be placed at $0.7446, the support price, to minimize potential losses in case the price drops unexpectedly. The target price can be set at $0.8436, the resistance level, aiming to capture a significant portion of the anticipated price increase. This medium-term strategy allows for a balance between risk and reward, capitalizing on the bullish forecast while mitigating potential downside risks. Based on the provided TRON price information, a short-term investment strategy appears to be the most suitable approach. The historical price data reveals a fluctuating trend with a slight upward bias. However, the recent price action shows a slight pullback, aligning with the forecast, which suggests a potential consolidation or minor correction in the near term. Therefore, a short position could be considered, aiming to capitalize on the potential price dip. An entry price around $0.196, slightly below the current price and the recent support level, could be considered. The stop loss should be placed at $0.202, above the recent resistance level, to limit potential losses. The target price could be set at $0.194, the support level, aiming to capture a modest profit from the anticipated price decline. This strategy takes advantage of the short-term bearish outlook indicated by the price action and the forecast while managing risk through a well-defined stop loss. Given the current price trends and forecast for SE, a short-term investment strategy appears most suitable. The historical prices demonstrate a general upward trajectory, although recent fluctuations suggest some volatility. The forecast prices indicate continued growth, reaching a peak around $0.754 within the next week. This upward momentum, coupled with the support price at $0.5408, suggests a potential for further gains. Therefore, a long position in SE is recommended for a short-term investment horizon. A suitable entry price would be around $0.646, close to the current price and below the forecast peak. To manage risk, a stop-loss order could be placed at $0.631, slightly below the immediate forecast price. The target price should be set at $0.754, aligning with the highest forecasted price, allowing for potential profit capture. This strategy aims to capitalize on the anticipated upward price movement while minimizing potential losses. Based on the provided price information for Shiba Inu, a short-term investment strategy appears promising. The historical price data exhibits a fluctuating trend, but the recent upward movement suggests potential for further growth. The forecast price indicates a continued upward trajectory, with a peak near the resistance price. Therefore, an aggressive strategy would involve entering a long position at the current price, slightly below the support price, to capitalize on the anticipated price increase. The stop loss should be placed slightly below the support price to limit potential downside risk. The target price should be set near the resistance price, aiming to capture a significant portion of the projected price movement. This strategy leverages the short-term bullish momentum while managing risk through a well-defined stop loss. Based on the provided data for Dogecoin, a bullish investment strategy appears promising. The historical price data reveals a generally upward trend, with recent price fluctuations staying above the support level of $0.39085. The forecast prices also indicate a continued upward trajectory, suggesting a potential for further price appreciation. Considering these factors, a long position in Dogecoin is recommended. An entry price around $0.400 could be considered, allowing for some room to capture potential price movement. To manage risk, a stop-loss order should be placed at $0.390, slightly below the support level. A target price of $0.430 could be set, aiming to capitalize on the predicted upward movement and potential resistance level at $0.42858. This strategy prioritizes capitalizing on the short to medium-term bullish momentum in Dogecoin while implementing risk management measures. Hooked Protocol's price history shows a general upward trend, with recent fluctuations around the 45 cents range. The forecast suggests continued growth, with prices potentially reaching $0.546 in the coming week. Considering this positive outlook and the support price of $0.5386, a long-term investment strategy appears promising. To execute this strategy, we can set an entry price at $0.475, a stop loss at $0.457, and a target price of $0.544. This approach allows us to capitalize on the anticipated price increase while mitigating potential losses. The stop loss ensures that we exit the position if the price drops significantly, while the target price aims to capture a substantial portion of the projected gains. Based on the provided data for Aevo, a medium-term investment strategy appears most suitable. The historical price data reveals a volatile yet generally upward trending pattern. The recent price action has seen a pullback from a high of $0.467, but the forecast suggests a continued upward trajectory with prices reaching $0.463 by the end of the forecast period. This suggests a potential buying opportunity near the current price levels. A long position is recommended for this strategy. An entry price of $0.429 aligns with the current price and the support level of $0.462. The stop loss should be set at $0.415, slightly below the forecast low, to minimize potential losses. The target price can be set at $0.467, aiming to capture the potential upside move towards the recent high. This strategy allows for capitalizing on the anticipated upward momentum while managing risk through a well-defined stop loss. Given the price trends and forecast for Coin, a medium-term investment strategy appears most suitable. The historical prices demonstrate a fluctuating trend with both upward and downward movements. While the forecast suggests a slight upward trajectory over the coming week, the resistance level at $0.009287 indicates potential for consolidation or even a slight pullback. This suggests that a long position could be beneficial, allowing for potential gains as the price moves towards the resistance. An entry price of $0.00800 would provide a good starting point, aligning with the current price and the forecast. A stop-loss order at $0.00760 would help protect against significant price drops, while a target price of $0.00900 would allow for reasonable profits if the price reaches the resistance level. This strategy balances risk and reward, aiming to capitalize on the potential for moderate gains in the medium term. First, based on the provided historical price data and the forecast, Coin appears to be in a relatively stable range-bound market. The price has fluctuated between $0.01922 and $0.02346, with no clear indication of a strong upward or downward trend. The forecast suggests a slight downward movement in the coming week, but it remains within the established range. Given this, a short-term investment strategy with a neutral bias seems appropriate. Therefore, I suggest a short position on Coin. An entry price around $0.0226 could be considered, aligning with the current price and the potential for a slight dip towards the support level. The stop loss should be set at $0.0235 to limit potential losses if the price unexpectedly rises. The target price could be set at $0.0209, which represents a modest decline within the established range and provides a reasonable profit margin. This strategy aims to capitalize on the potential for a short-term correction within the existing price range. Based on the provided Pepe price information, a cautious short-term investment strategy appears most suitable. The historical price data reveals a downward trend over the past 2 weeks, with the forecast predicting further declines. Although the support price is relatively close, the resistance level is significantly higher, suggesting limited upward potential in the near term. Therefore, a short position on Pepe is recommended. An entry price around $0.0000205 could be considered, aligning with the current price and the predicted price decline. To manage risk, a stop-loss order should be placed slightly above the current price at approximately $0.0000208. A target price of $0.0000190 could be set, aiming to capitalize on the anticipated price drop while allowing for a degree of flexibility. This strategy prioritizes risk management and capitalizes on the current bearish momentum in Pepe. Given the price trends and forecast for Toncoin, a medium-term investment strategy appears most suitable. The historical prices demonstrate an overall upward trend, but recent fluctuations suggest a period of consolidation. The forecast indicates a continued upward trajectory, with prices potentially reaching $6.65 within the next week. However, the support price of $5.781 and resistance price of $6.887 suggest that Toncoin might experience some sideways movement before breaking out. Therefore, a long position is recommended for a medium-term investment horizon. An ideal entry price would be around $6.10, aligning with the current price and providing a cushion below the recent highs. The stop-loss should be set at $5.80, slightly below the support price, to limit potential losses. The target price could be set at $6.70, aiming to capture a significant portion of the potential upward movement while leaving room for further price appreciation. This strategy allows for capitalizing on the bullish outlook while mitigating risk through a well-defined stop-loss and realistic target price. Based on the provided historical price data and the forecast for Bitcoin Cash, a medium-term investment strategy appears to be the most suitable approach. The historical prices demonstrate a general upward trend, with recent fluctuations suggesting consolidation around the support price of $490. The forecast indicates continued upward momentum, with prices projected to reach around $525 within the next week. This suggests a bullish outlook for Bitcoin Cash in the medium term. Therefore, an investment strategy for Bitcoin Cash would involve taking a long position with an entry price around $495, aligning with the current price and potential support. A stop-loss could be placed at $485 to mitigate risk in case of a sudden price drop. The target price could be set at $520, aiming to capitalize on the forecasted upward movement. This strategy allows for potential profit while managing risk within a reasonable timeframe. Given the price trends and forecast for Chainlink, a moderately aggressive investment strategy would focus on a short-term approach to take advantage of the upward momentum. The historical prices show a consistent upward trajectory, with the current price hovering near the support level of $18.358. The forecast suggests Chainlink could rise to $19, with a resistance level at $19.289, indicating potential for further upward movement. In this scenario, a long position is advisable to capitalize on the anticipated price increase towards the resistance level. A suitable entry price would be $18.50, allowing you to buy in before the price potentially surges towards the resistance. The stop-loss should be set at $18.30, slightly below the support price, to protect against any unexpected price drops. The target price should be $19.1, allowing you to take profits before the price potentially encounters resistance at $19.289. This strategy aims to capitalize on the short-term upward momentum of Chainlink while mitigating potential risks. Based on the provided price history and forecast for Polkadot, a long-term investment strategy appears promising. The historical data reveals a consistent upward trend, with the price steadily increasing over the past 2 weeks. The forecast further supports this bullish outlook, projecting continued growth in the coming weeks. Considering these factors, a long position in Polkadot is recommended. An entry price of $8 would allow you to buy in near the current market price, while a stop-loss at $7.65 provides a cushion against potential short-term fluctuations. The target price should be set at $8.70, aiming to capture the anticipated upside potential based on the forecast and resistance level. This long-term strategy allows you to capitalize on the long-term growth trajectory of Polkadot while managing risk effectively. Given the historical price trends and the provided forecast for Near protocol, a medium-term investment strategy appears to be the most suitable approach. The historical prices demonstrate a generally upward trend, but with some fluctuations. The forecast suggests continued upward momentum, with prices potentially reaching $7.16 within the next week. This suggests a bullish outlook for Near protocol in the medium term. Therefore, an investment strategy for Near protocol should involve a long position. A suitable entry price would be around $6.50, aligning with the current price and allowing for some room for potential price fluctuations. The stop loss should be set at $6.15, slightly below the support price of $6.138, to protect against unexpected downward movements. The target price could be set at $7, capturing a significant portion of the projected price increase while allowing for some margin of safety before reaching the forecasted peak. This strategy balances risk and potential reward, capitalizing on the bullish outlook for Near protocol in the medium term. Given the price trends and forecast for stacks, an aggressive investment strategy would focus on a short-term approach to capitalize on the anticipated upward momentum. The historical prices demonstrate a consistent upward trajectory, with the current price hovering near its forecast and close to the support level of $2.161. The resistance is at $2.385, indicating that there is still room for upward movement. In this scenario, a long position is advisable to capitalize on the potential for a price increase towards the resistance level. A suitable entry price for this long position would be $2.161, aligning with the support price and offering a low-risk entry point. The stop loss should be set slightly below the support price at $2.15, protecting against any unexpected downward movement. The target price should be set at $2.35, aiming for a conservative profit target before reaching the resistance level of $2.385. This strategy allows for potential gains while managing risk effectively. Given the 2-week price history and 1-week forecast for Aptos, a moderately aggressive investment strategy suggests a long-term perspective. The price history shows a general upward trend, with fluctuations around the $12 price level. The forecast indicates continued stability and potential for slight growth, hovering around $12 for the next week. Considering the support price at $12.28 and the resistance at $12.70, it appears that Aptos is currently consolidating around its support level. Therefore, a long position is recommended for a medium-term investment strategy. The entry price could be set at $12.20, slightly below the support level to capture potential dips. The stop loss should be placed at $11.90 to limit potential losses. The target price could be set at $12.70, aiming to capitalize on the potential upward movement towards the resistance level. This strategy balances risk and reward, allowing for potential gains while mitigating potential losses. Given the provided price history, forecast, and support/resistance levels for Litecoin, an aggressive investment strategy would lean towards a long-term position. The historical price data demonstrates a consistent upward trend, with the current price hovering near the support level. The forecast indicates continued growth, suggesting Litecoin could reach prices above its current resistance level. This positive outlook, coupled with the potential for sustained upward momentum, makes a long position a suitable choice for a long-term investment strategy. To execute this strategy, an entry price near the current support level would be optimal, allowing for potential gains as the price moves towards the forecast levels. A stop-loss order placed slightly below the support level would help mitigate risk in case of unexpected downward price movements. The target price should be set above the resistance level, aiming to capture significant profits if the forecast proves accurate. This long-term approach allows investors to benefit from the potential long-term growth of Litecoin while managing risk through a well-defined stop-loss order. Based on the provided information about Uniswap, a medium-term investment strategy appears most suitable. The historical price data shows a generally upward trend, with recent fluctuations suggesting consolidation. The forecast indicates continued upward movement over the next few weeks, reaching $13. This positive outlook, coupled with a support price of $12.947, suggests a good entry point for a long position. To implement this strategy, consider entering a long position at $12.95, the support price. This provides a margin of safety in case of a minor pullback. Set a stop-loss order at $12.50 to limit potential losses. The target price could be set at $13.50, aiming to capture a significant portion of the expected price increase. This strategy balances risk and reward, allowing for potential profits while mitigating downside exposure. Remember, this is just a suggestion and should be adapted based on your individual risk tolerance and investment goals. Based on the provided information for Bittensor, a medium-term investment strategy appears to be the most suitable approach. The historical price data reveals a general upward trend, with recent fluctuations suggesting consolidation. The forecast indicates continued growth, albeit at a slightly slower pace than the historical trend. This suggests a period of sideways movement with potential for further upward momentum. Considering this, a long position is recommended. An ideal entry price would be around $525, aligning with the current price and the support level. The stop loss should be set at $515 to mitigate risk in case of a sudden price decline. The target price could be set at $560, aiming to capture a significant portion of the anticipated upward movement. This strategy allows for capitalizing on the positive price outlook while managing risk through a well-defined stop-loss order. Based on the provided information for Internet Computer, a medium-term investment strategy appears to be the most suitable approach. The historical price data shows a generally upward trend, with recent price fluctuations indicating potential volatility. The forecast price suggests continued growth, reaching $12 by the end of the period. However, the relatively close proximity of the support and resistance levels suggests a period of consolidation before a potential breakout. Therefore, a long position is recommended with an entry price around $11. A stop loss should be set at $10.80, slightly below the recent lows, to mitigate risk. The target price should be set at $12.50, aiming to capture the full upside potential indicated by the forecast. This strategy allows for capitalizing on the bullish trend while managing risk effectively. Given the current price trends and forecast for Artificial Superintelligence Alliance, a short-term investment strategy focusing on a long position appears promising. The historical price data reveals a general upward trend, with the recent price action consolidating near the support level of $1.228. The forecast predicts a continued upward movement, with prices potentially reaching $1.46 over the next week. This suggests that Artificial Superintelligence Alliance is poised for further gains in the near term. Therefore, an aggressive short-term investment strategy would involve entering a long position at the current market price, which is slightly above $1.27. The stop-loss order should be placed at $1.228, the identified support level, to limit potential losses. The target price should be set at $1.46, aligning with the highest predicted price in the forecast. This strategy capitalizes on the anticipated price increase while managing risk effectively. Based on the provided price information for Optimism, a moderately aggressive investment strategy appears suitable. The historical price data demonstrates a clear upward trend, with recent price movements indicating potential for further growth. The forecast price also suggests a continued upward trajectory over the next week, reaching values above the current price. This positive outlook, coupled with the support price positioned below the current market value, suggests a favorable environment for a long position. Therefore, an investment strategy for Optimism could involve entering a long position at the current market price, with a stop loss set slightly below the recent support price of $2.455. A target price could be set at $2.587, aligning with the resistance price and allowing for potential profit capture. This strategy balances risk and reward, capitalizing on the anticipated price increase while mitigating potential losses. This approach aligns with a medium-term investment perspective, allowing for sufficient time to benefit from the projected price movement. Based on the provided Ethereum Classic price information, a medium-term investment strategy appears to be the most suitable approach. The historical price data reveals a generally upward trend, with recent fluctuations around the $28 to $29 price range. The forecast suggests a continuation of this upward momentum, with prices projected to reach $30 to $33 within the next week. This indicates a bullish outlook for Ethereum Classic in the short to medium term. Therefore, a long position is recommended for this strategy. An ideal entry price would be around $29, aligning with the current price range and below the projected resistance level of $35.08. To manage risk, a stop loss should be placed at $28, slightly below the recent support price. The target price for this strategy could be set at $33, aiming to capture a significant portion of the potential price appreciation projected by the forecast. This medium-term investment approach allows for potential profit while mitigating risk through a well-defined stop loss. Given the provided price information for Ethereum name service, a bullish investment strategy appears to be the most suitable approach. The historical price data shows a consistent upward trend, culminating in a significant jump to $33. The forecast predicts further growth, reaching as high as $33. This upward momentum, coupled with the strong support level at $33.16, suggests a high probability of continued price appreciation. Therefore, an aggressive investment strategy would involve taking a long position on Ethereum name service. A suitable entry price would be around $33, aligning with the current price and the forecast. To manage risk, a stop loss order should be placed at $32.50, just below the recent support level. The target price could be set at $40, aiming to capture a significant portion of the potential upside movement. This strategy capitalizes on the bullish momentum and aims to generate substantial returns within a medium-term investment horizon. Based on the provided price information for Solana name service, a medium-term investment strategy appears to be the most suitable. The historical price data demonstrates a generally upward trend, with recent fluctuations. The forecast indicates continued upward momentum, suggesting potential for further gains. However, the price is currently near its resistance level, indicating potential for consolidation or a short-term pullback before continuing its upward trajectory. Therefore, a long position is recommended for a medium-term investment strategy. An entry price of $0.235 could be considered, allowing for a slight dip before entering the market. The stop loss should be set at $0.225 to mitigate risk in case of a sudden price drop. The target price could be set at 30 cents, taking advantage of the potential for continued upward movement towards the resistance level. This strategy aims to capitalize on the positive price trends and forecast while managing risk through a well-defined stop loss. Given the price trends and forecast for Aave, a long-term investment strategy appears to be the most suitable approach. The historical price data demonstrates a consistent upward trajectory, with recent price action suggesting a potential breakout above the previous resistance level. The forecast prices also indicate continued upward momentum, projecting a significant price increase over the coming weeks. This suggests that Aave has the potential to reach new highs in the near future. Therefore, an investment strategy involving a long position in Aave is recommended. A conservative entry price would be around $180, aligning with the recent price action and the forecast. A stop-loss order could be placed at $170 to mitigate potential downside risk. The target price should be set at $205, taking into account the projected price increase and the potential for further upside. This strategy allows for a significant profit potential while managing risk effectively. Given the price trends and forecast for Injective, a medium-term investment strategy appears to be most suitable. The historical prices demonstrate a generally upward trend, with recent fluctuations. The forecast indicates continued upward momentum, suggesting Injective could reach $31 within the next week. The support price sits at $26.72, providing a safety net for potential price corrections. The resistance level at $30.63 signifies a potential ceiling for short-term growth. Therefore, an investment strategy focused on a long position with a medium-term perspective is recommended. The entry price could be set at $29, allowing for a margin of safety above the current price and recent fluctuations. The stop loss should be placed at $26.72, aligning with the support price and limiting potential downside risk. The target price could be set at $31, capitalizing on the forecasted price increase. This strategy balances risk and reward, aiming to profit from the anticipated upward trend in injective over the medium term. Based on the provided Polygon price information, a medium-term investment strategy appears most suitable. The historical price data reveals a consistent upward trend, with recent fluctuations suggesting consolidation rather than a reversal. The forecast prices indicate continued growth, albeit at a slightly slower pace. This suggests a potential for gradual price appreciation over the next few weeks. Considering this, a long position in Polygon is recommended. An ideal entry price would be around $0.526, aligning with the current price and the recent dip. To manage risk, a stop-loss order should be placed at $0.492, a level representing a significant support area. The target price for this investment could be set at $0.576, representing the recent high and a reasonable profit margin within the medium-term timeframe. This strategy capitalizes on the upward momentum while incorporating risk management measures to protect potential losses.